Today we're talking about saving money, and no, I'm not going to tell you to skip Starbucks. Hi, this is Amy Kilco and Keller Williams, and today I'm talking about mortgage interest rates and why they're so important to you, whether you own a home or are thinking about purchasing a home, how mortgage rates affect you as a buyer or a homeowner. So interest rates the last couple weeks have been at the all-time low for the year 2019, and the mortgage rates really affect home affordability because they really affect what you're going to pay per month for your home. And if you already own a home, I want you to consider refinancing. I'm not a lender, but I am a realtor, so I can always help you determine if that's the right move for you. If you have a higher interest rate, you might look at refinancing. If you purchased a home with an FHA mortgage with only 3.5% down, PMI, private mortgage insurance, stays with your payment through the entire length of the loan or the entire length that you own the home and pay off the mortgage. So you want to try to see if you have enough equity to refinance and get rid of that PMI, and that's going to really lower your payment. You're probably paying a couple $100s a month in PMI. And if you purchased a home with a conventional mortgage and you put less than 20% down, it might also be time to refinance because you build up equity. And now you have a home where you have at least 20% of equity. PMI does fall off with a conventional loan, but it is a lot faster and a little more streamlined if you do refinance. So I also want to point out that even when you hear interest rates are at 3.65%, interest rates vary from person to person. Everyone's financial situation, their debt, their income is all different. So all those things play a factor. So if you bought a home and maybe you didn't have the best credit, but you're able to buy the home, so you had decent credit, but now since you've been paying your mortgage every month, your credit score has really risen, you might want to refinance because now you have a higher credit score than you did when you first bought your house. So I just want to point these things out to you to make sure you're really looking at all the options when it comes to home financing. Now, for the people that bought their home around 2010, you guys, this is for you. This is the best tip. You have a lot of equity in your home. If you've never touched it and you've just continued been paying for the last 9 years, you probably have a higher interest rate. I want you guys, if you plan on staying in that home, refinance. Because if you refinance now and you switch from that 30-year mortgage to a 15-year mortgage, so you paid 10 years, now you switch to 15, that's 25 years. Well, you used to have a 30-year mortgage, now you have a 15-year mortgage. You lost 5 years of payments right there in that refinance. And since the rates were probably around 5.5% when you purchased, they're a lot less now, your payment is probably going to stay the same and you're going to have a less term on that mortgage. So it's something you want to look forward to. Or if you have a ton of equity in your home, sell it. Buy your next house. You have a ton of money to put down on the next house that you just build up over time. So I am a realtor. I am not a lender, but I can give you preliminary advice on if you have enough equity to lose that PMI. I can also give you lender recommendations. So feel free to reach out. And if you like this video, please give it a thumbs up. And if you know somebody that might be interested in saving money, I'm sure you can think of 1 or 2 people like that. Share this video with them because they might not know about this information and they could be positioning themselves to save some money if they look into refinancing. So I hope you found this video helpful. Thanks for watching. Bye.